So I welcome you all to this masterclass, and please, we're going to be using a PPT, which I'm going to be sharing right now. So in the event that you have a question, just like Cyrus mentioned, please feel free to send it over in the chat so that we do not leave you behind. So my screen has been shared. I am hoping that every one of us is able to see that. So I just need about 1, 2, 3 confirmations that, yes, we can see the screen, and then we move on. Are we able to see the screen, Cyrus, from your end?
Yes, we are able to see it, especially from my end. Let me check in the chats here. Yes, I see 2 entrepreneurs already. Salim and Grace, they are also able to see the display. Okay. So you can continue, Mr. Raymond.
Okay. Now, I pray that many of us have at least a laptop or a phone, because towards the end, we are going to have a practical session where we are going to see how we actually file 1 or 2 different types of taxes. So if you're not near your machine, please, I request and implore you to move next to one and have a very good internet connection so that we do not actually leave you behind and you benefit from this session. So first and foremost, we're going to have an introduction to the taxation in Uganda. And we're just going to have a brief overview of the tax environment. In Uganda, we all know that we have a body that's responsible for tax collection, which is the Uganda Revenue Authority. Many of us look at these guys as enemies to business because sometimes they tell us things that we probably have never heard of, or things that we don't know, or even many times they tell us things we know, but we're just adamant about. And between me and you, the law is what puts URA in place. And everything they do, they will always quote the act that they are using to enforce many of these things. So briefly, I want to take us through some of the roles of the Uganda Revenue Authority so that we can appreciate them and also know that it is actually their role to do what they are doing right now. So role number 1 is revenue collection, which we all know. The URA is responsible for collecting the various types of taxes, which include the income tax, value-added tax, customs duties, excise duties, payee, among others. So these taxes are essential for funding public services and infrastructure. In addition to that, these guys also collect what we call non-tax revenues. Non-tax revenues are things that we pay for, like the police fines, licenses we pay to municipal councils and all that. But also it entails the things we subscribe for, like the URSB payments, stamp duties, all that is non-tax revenue. The URA is also responsible for tax administration. And one among the many roles of tax administration is implementation of tax laws. We all know that at every beginning of a financial year, things change in the income tax. And once something changes in the income tax, the bill is passed and signed by the president, so it becomes a law. So if there's an increment in anything, for example, fuel, for example, in excise duties, in OTT tax, it is a law. So everything that URA does must be backed up by law. So part of their role is tax administration, and they implement the laws that are passed by the parliament. The other role is taxpayer registration, and URA is definitely in charge of this. So I implore all of us not to go to register for taxes anywhere else. It is the Uganda Revenue Authority that manages the registration of taxpayers and the issuance of tax identification numbers. Lastly on that, filing and payment processing. So the URA oversees the filing of tax returns and the payment of taxes by all individuals and businesses. And these include providing systems, which we all know. Among them is one that has been very contentious lately, which we call IFRIS. So all those fall under the docket of tax administration. Then we have compliance and enforcement. So don't worry if I'm moving so fast, you let me know. But also this PPT will be available for future reference because I want us to spend much of our time on the practical bit so that we all get to understand it very well. For compliance and enforcement, we have tax audits and investigations. If they suspect you of either maybe evading taxes or under declaration, they will come. They will definitely come at your door and try to make audits and investigations. Sometimes they will carry your computers, they will carry all your documents so that they can be able to exactly see that you're actually paying the right taxes you're supposed to pay. Enforcement, we have seen URA enforcing people at borders, those who are dealing in Magendo, those who try to cross borders without making the necessary payments. We've seen the URA do enforce such kind of payments. Customs services, that is import and export regulation. Facilitation of trade, they streamline the procedures under which trade happens, especially at the borders. Then also taxpayer education and support. We've seen these sessions that they have carried out on TV. Recently, there's something called URA TV, where they talk to everyone and try to sensitize the public on which taxes you're supposed to pay, how you're supposed to pay them, when you're supposed to pay them, and in what magnitude you are required to pay. Customer support is also among their role. Make sure that everyone is supported when it comes to tax and any inquiries you have in relation to the same. So we are now going to look at the different types of taxes applicable to startups and small businesses in Uganda. Now, this is a question I have faced very many times. What taxes am I supposed to pay as a small business? Someone comes from the municipal council, they tell me pay this. Another one comes from URA, they tell me pay this. So I want to demystify that fact that URA is the overall body that does tax collection. However, it is responsible for what we call income tax, value-added tax, but also all taxes collected at the municipal level or town council level are also remitted to the Uganda Revenue Authority. So those different bodies have different taxes and licenses that they charge for. So do not mix the two and say, for me, I'm not supposed to pay to the municipal, I'm only supposed to pay to URA. The law is very clear. There are things or there are taxes that the municipals and the town councils will charge, but there are also those taxes that directly URA is responsible for. So for today's class, we will delve so much into those taxes that the URA is actually responsible for. Number one is the income tax that we've all heard about. Under this, we have the corporate tax and the presumptive tax. Corporate tax is tax that is charged to companies. And I believe many of us here are registered companies in one way or the other. So this is a tax that is charged at the end of every financial year. And it has a standard rate, which is 30% of your taxable income. Now, when it comes to the terminology of taxable income, we're going to see it later in the next slides. What is actually taxable income? How do we arrive to it? How do you know that I'm actually supposed to pay, my taxable income is 10 million, not 100 million? We'll get to see that later. Under this, we do filing, which entails our income, our expenses, and all the calculated tax. Then the next kind of income tax that we pay is the presumptive tax. Now, presumptive tax is a tax that was enacted by law because the URA realized that there were very many small businesses out there that, one, don't have capacity to pay accountants. They don't have capacity to afford machines that will do the taxing and all data storage. So they came up with this presumptive tax where they said, okay, if you run a small shop at your village and you don't have a turnover of more than 10 million, They will not ask you to tell us your expenses because they believe you even don't keep records. They also believe you don't have receipt books or things like that. You just do your business from your mind. So they said, okay, if you have a turnover, now turnover is your sales, not more than 10 million shillings, you will be paying 100,000 Uganda shillings. So if you have a turnover of 10 million to 30 million, you will be paying 250,000. 30 million to 50, you will be paying 450. So that tax is already set. So when a URA official visits you, maybe in your arcade or at your small shop, and tells you you're going to pay 100,000 shillings, do not make noise and say, Olimubi, you are thieves. No, this is by law, and it's already set because of the fact that if you are asked to present your books of accounts and financials, you actually don't have them. So instead of issuing an administrative tax, they will simply say that you have to do exactly what they have said. So that threshold is put in place to guide those small businesses that actually don't have a turnover of 150 million Uganda shillings. And you can see that if your business is between 80 million and 150, you are supposed to pay 1.1 million shillings. Every business that has a turnover exceeding 150 million Uganda shillings, that is, if your sales, if the money you collect is above 150 million Uganda shillings, you are supposed to be qualifying for VAT. But even you, a business that is lower than 150, you can voluntarily sign up for VAT. But if your business has 150 million and above, it is a must that you have to sign up for VAT. So filing of VAT returns is by 15th of every month, and we will see it in the next slides. We also have pay as you earn. Now this pay as you earn is a tax we pay to our employees. And there is also a threshold that we are mandated to pay. For example, if your employees are earning 235 and below, you're not supposed to collect pay as you earn from them. But if they fall in the categories that we see below, you're supposed to collect those taxes from them. Now, on this is a tax that your employees are paying to government. And on this, you're actually an agent on behalf of URA. So local service tax, I believe we've all heard about local service tax. This is a tax collected by the municipal councils. And different municipals and town councils have different rates, depending on how they have set up and their taxing strategy and policy. So local service tax is paid to the municipal government, that is the town councils and the local councils. So if someone approaches you and says you're supposed to pay local service tax, do not say, I am not supposed to pay it. It is a tax we are supposed to pay. And it depends on, one, the number of employees that we have in your business, but also how much you actually pay them. So you can choose to pay this annually at once, or quarterly or monthly, depending on the arrangement of your municipal council. Lastly, we have stamp duty. Stamp duty is paid off legal documents. If you're buying land or transferring property, if you're having transferring shares in your company or business, if you have any agreements you have to certify, stamp duty is something that you have to pay. And it's normally in the range of 1 to 1.5%, depending on the kind of transaction you're handling. So excise duty is also a tax, but that one majorly does not apply so much to us. But one way or the other, we actually pay it. If you have a bank account, you are actually paying excise duty if you look at your statement well. If you have mobile money or anything that does with financial transactions, one way or the other, you are paying excise duty because it's a charge that was also enacted by law. If your business is dealing in imports, definitely import duty is one of those taxes that you will be planning to pay. Once your goods to be allowed to cross over from one border to another. We also have withholding tax. Withholding tax is a payment on goods and services. And here, you must be registered with URA as a withholding tax agent. Not everyone is mandated to collect withholding tax. You must be a withholding tax agent. And how does this one operate? For example, if you hired a consultant to come and do something at your business, for example, they are an accountant, they are a lawyer or something, and it's a one-off payment and they are not a monthly customer, you are mandated to retain 6% of what you pay them. For example, if you're paying your accountant 1 million shillings, they must leave behind 60,000 shillings, which you must also declare with URA and tell them, I received services from so-and-so as a consultant, and we withheld 6% from the payment that we gave them. So this is applied to both residents and non-resident consultants. This is a tax that we must declare and pay to URA on a monthly basis. So what are the benefits of being tax compliant? We all have this thing that we are told in the early stages of the business, do not get a TIN now, wait until they come. Do not file taxes so fast. Do not go to police yourself. Today I'm here to tell you that it's actually good to go to these people before they actually come to you, for the reasons that we shall see in the next slides. So when you're tax compliant, that is if you're filing your taxes very well and on time, you will avoid penalties and interest because the law is clear and the deadlines are very clear. There are those taxes we're supposed to file every financial year at the beginning. There are those we are supposed to file at the end. There are those that we're supposed to file on a monthly. If we do file them as we're supposed to file them, you will avoid penalties. And remember, every penalty that you get, if not paid, will come with an interest element on it. So to avoid all these eating into our small income, we are supposed to make sure we pay these taxes. Improved business reputation. Imagine you're running a business and all the time you want to work behind curtains. When they tell you there is a contract here, you start running to your friends and colleagues. Do you have a company? Do you have a company? I have a deal. Please help me. Let me use your company, because you are running away from taxes. And remember, for you to have continued business, you must be authentic. Authenticity comes with these very simple things, because today's serious people who are going to give you serious contracts will require that you are tax compliant. And some of the things they will ask you for is a tax clearance certificate. If you don't have it, you may not get some opportunities. You may miss out on a number of things. So you also don't want URA to always be closing your business because probably you have defaulted on one thing or the other. So we must make sure that we are tax compliant at all levels. Access to business opportunities. I've already talked about things to do with contracts and tenders. There is no serious tender you will get when you're not tax compliant. Today, when you move to banks and you're borrowing as a business, if you have looked at all those lists, one of the things they will ask you for is a TIN certificate. After the TIN certificate is required, they will also ask you for a tax clearance certificate. Between me and you, today, it's very hard to obtain a tax clearance certificate if there's anything missing with your tax compliance. They will look at your returns. Have you been filing them on time? Do you have any tax arrears? Have you paid them? Do you have a payment plan? So if you don't have any of those, it means you're not tax compliant and you will be missing out on business opportunities. No one will lend you today as a business unless you have a tax clearance certificate. Smooth operations. Imagine you're a business and URA comes and they're telling you close. We are doing a tax audit on you. You will definitely be disrupted. So I believe none of us want to have such experiences. We all want to have a business that is operating smoothly and we can be able to run without any disruption. Next is financial planning and stability. when we know what taxes we are supposed to pay, it's easy for us to plan well. We don't want to have scenarios where we are firefighting every time because you have gotten maybe a tax assessment that you don't agree with, you've gotten an administrative assessment that you don't agree with, and then you start firefighting here and there. You start asking people, do you know anyone in URA? I remember your brother was working in URA. Please give me their contact. And then you start disturbing people with favors and all that. So when we are compliant, we are able to plan and we are stable when it comes to business. Legal protection. Whenever you're not tax compliant, you have actually broken the law. If you don't file on the times you're supposed to file, you have broken the law. And any business that is not meeting these requirements is susceptible for legal impeachment. That is why when you go to the commercial court, you will find issues to do with people being sued because they are not doing what they're supposed to do right. Recently, I believe you've also seen there is a company that was resurrected. It was wound up with a very huge tax area, but when you are went to court, the judge decided to resurrect it. Now, what that means is that the court lifted the veil. You know, we normally hide behind the veil and say, no, this is a company. So the company is also an individual. So I'll do whatever that I am doing, then I bury the company. This time around, the judge said, no, I will resurrect this company, bring it back to life, and the directors there, if still alive, they will face the law. So now, if you are compliant, you will avoid all these things. So imagine such a precedent and what it is going to cause to the business environment. To the people who have been trying to do that while defrauding others, they do transactions, then they finally close off business. This is a very a serious precedent that was set. So I encourage all of us to start off with compliance right away. Of course, the rest is national development, employee satisfaction and retention. It increases trust amongst the people you're working with, eligibility for incentives and reliefs. If you are very keen, to those of us who have been filing our taxes very well, when COVID hit in 2020 and all those years, many of us received tax reliefs. If you look at your tax statement, URA gave almost everyone who was filing a tax relief. They deducted most of things to do with areas for payee, areas for income tax and all those things. We all got those tax reliefs. If you didn't, you will need to check yourself. But I'm one of them. I remember when I checked, most of those things were waived. So if you're compliant, you are eligible for these incentives. But if you're not, it's hard to explain or ask for an incentive if you're not even compliant with the small. Peace of mind. I believe when anything tax is mentioned, all of us get frightened. But if you're compliant and you've done things the way they are supposed to be done, you will not need to tell people, close the gate, close the door, because you think URA officials moving around. So being tax compliant is something that will give us peace of mind as business people. So what are the consequences of being non-tax compliant? Like I've already mentioned, there are fines and penalties if you're not compliant, and each fine comes with an interest charge. So you find 10 million, but then you have to pay up to 24% per annum on that fine. There are legal consequences. You can be taken to court in the event that probably you're non-compliant and you're not committal. And all these are criminal cases when it comes to tax evasion. Business disruptions. I've already mentioned and elaborated on that. Your business will be closed, you will be put in the newspapers, and you know that is quite disgusting when you're trying to chase serious contracts and trying to build a serious reputation. Asset seizure. When you don't pay tax, the URA is mandated and can ask court to seize your property. For example, if you have big lump sums, and your gets to know that you actually have a building, they will come for that building, sell it off, recover the taxes, and probably give you the balance, if you are lucky anyway. So those are some of the consequences of being non-tax compliant. Loss of business opportunities, of course, I can't elaborate that more. If you're non-tax compliant today, part of the requirements of any partnership is tax clearance. If you have borrowed from the bank, if you have looked for investors before, part of the requirement list is tax clearance certificate. If you don't have it, it's going to be very, very hard to convince a bank or a lender or a partner that if they gave you their money, if they gave you their investment, tomorrow URA is not going to come and seal you and their money is lost in that mix. So if you're a startup and you're thinking of, okay, I need some funding, I think I need to go to the bank, compliance is one of the things that you must consider at this stage. Damage to reputation. Reputation is very key for all of us in business. And we all know that some of the businesses that we do rely on how good people recommend us. So if you have negative publicity because of tax, someone will just Google you and see that, okay, this guy was closed up the other month and he's the one coming for a deal. They will simply reserve it for the next ideal person. So I believe and know that we have all seen these incidences, and we never want to be in the same position like that. Employee issues, of course, come with non-tax compliance, legal claims, operational challenges. Imagine URA tells you that you have an administrative tax of 120 million. Sometimes the figures they give us, we've even never heard of them. But all these are system generated. So imagine fighting with an administrative assessment of over 80 million, money that you have even never made, but they're telling you you have to pay it. And you're trying to fight left, right, and center. The man tells you, no, for me, from the administrative assessment, it is 80 million. Prove that it's actually not 80, but 3. Remember, you have not been filing for the past 1 to 3 years. There's no way you're going to prove that it's not 80, but rather 1. The most likely incident is that you're going to enter into a payment plan, which payment plan is now going to cause you cash flow problems. So it will definitely lead to operational challenges. So compliance is something that we must think about as business people. I've already talked about the missing of tax reliefs and incentives due to non-compliance. So it's imperative upon all of us to make sure that we actually fulfill. I'll give an example of reliefs and incentives. In the tourism business, we all know that government has an incentive for vehicles that are in tour operations. That's why you see many vehicles with tourism companies actually have red number plates, because they have exempted them from some taxes. But you can't get this exemption unless you are compliant. You will not say, I'm in a tour business, so I'm also importing a business, when you have actually not filed your returns properly. So you must make sure that in order to partake of these incentives, you must be ready to be compliant. Those dealing in maybe floriculture, where you need those refrigeration vehicles to transport maybe flowers, transport milk, and things like that. If you went to government and said, I need an exemption for this vehicle of mine, because yes, it's catered for in the law, that if you're operating such a business and you have a vehicle like that one, you'll be exempted from paying tax. However, if you're not compliant, if you're not filing your things on time, you will not get that relief. As simple as that. So we are approaching the gist of the day. After giving a brief of the compliance bit, some of the taxes that we expect as a business, we're now going to start looking at what does it look like filing taxes. One of the things I must say, you can't file taxes unless you actually have a TIN number. The TIN number is your tax identification number. It's a number that shows that you are actually known by the tax regulator or the tax authority. So for those of us who are still contemplating, do I need a TIN? Do I not? Here is some guidance to help you on how to actually get a TIN. One of the things I discourage you from doing is going through middlemen to help you get a TIN. This is a digital world, and all these things can be done on the website, the URA website. So you will simply need to go to the URA website, and if you're a company, the requirements are there. We all know the company form 20, the certificate of incorporation, the contact person, most likely is the founder or the director. You will need a dedicated email address specifically. Probably you could be used as a director or the company email that is easily accessible and one that you will not forget. You will also need a dedicated phone number. You also need to have a bank account. And you'll also need to have a TIN as the company director. I hope we are clear on that one. So with all these requirements, you will simply go to URA website and you'll click the button that has Get a TIN. Once you go to Get a TIN, you will be directed and you will follow through the steps as we might see later on. And then you'll be able to fill in all those details, upload all these requirements, and you'll get a TIN. Now, what are the dangers of going through a middleman? Going through a middleman means, one, most likely they will use an email address that you may not have access to. Two, there's a likelihood of signing you up for wrong taxes. And I repeat this, there's a likelihood of signing you up for wrong taxes. Now, imagine this person is signing you up, and instead of income tax, they sign you up for rental tax. A tax that you actually don't even know about. Now, what that one actually means, if that person signs you up for rental tax, for whatever tax you are signed up, there is a mandatory filing requirement, which if you do not meet in the time frame that is you're required to do it, it will attract a penalty. That is why many of us wake up after 6 months or a year, and URA is sending you an email that you have been given an administrative tax of 7 million. Then you will say, I don't know about that. But it is because the person you sent to get you a TIN number did their own work. They signed you up for taxes for the sake of just completing the job, but they didn't sign you up for the right taxes. Or maybe sometimes we're not signed up for import tax, and here you are importing something, and then you are delayed at the border. Remember, whenever you delay at the border, there are sometimes storage charges, storage fees, the time, and all that, demurrage, because now you're trying to re-amend your TIN to maybe sign you up for import tax. So we must make sure that when we are registering for tax, we are aware of the kind of taxes that we're supposed to pay as a business. If someone signs you up for payee, and yet your business is you don't have employees that are mandated to pay payee, you will be nagged because URA will always be sending you messages. You have not filed tax, we are going to penalize you, and yet actually your business doesn't have people who are paying payee. So it's imperative that we get to know the kind of taxes that our businesses, however small, are required to pay. So I'll now move on to dwell onto two kinds of taxes and how we actually file them. So I mentioned corporate income tax and presumptive tax, where I mentioned some of the differences that you can actually see here. It is 30% of taxable income. So we're going to see what taxable income actually is. And I also talked about the presumptive tax. Presumptive tax, just as the name presumptive is, we are assuming, we are not certain that actually you made 10 million, but we are saying, yes, we see that this shop may not have made a turnover of up to 10 million. So we shall say pay 100,000. Instead of telling you now, hire an accountant for your small retail shop at back home. Presumptive tax, I have already shared the thresholds, and you'll also get them. You can also get all this information from the URA portal, but also when I share this, you'll also be able to look at them. So we get to filing income tax for small businesses. Now, at this point, I will request all of us now to get closer to our machines, and we actually go to the URA website so that we can practically experience some of these things. Many of us are paying heavily to people who are not even qualified to do these things for us. And yet, this is money we can even save to be directed to other costs that are more pressing to the business. So, under this, I mentioned that income tax filing starts with filing provisional tax. Now, what is provisional tax? You will say, okay, what is the word provisional? At the end at the beginning of every financial year, the law requires you to make an estimate of the income you expect to make. For example, if you're microfinance institutions, you will estimate and say, okay, for this year, I think I will make 100 million shillings. And once you say that, okay, yes, 100 million shillings is what I expect to make. Now, this is an assumption, remember. It's a provision required by law. So, when you're going to file provisional returns, like I will show you later on, you pay 30% of that estimate there and then. And this is an allowance given to you that, okay, in the event you will make it at the end of the year, you have actually already paid part of it. So somehow, somewhere, you saved the stress of looking for that money at the end of the year. So URA gives you an option of paying this in 4 installments. Now you will ask 4 installments, how does this happen? So if you said that you estimate to make 100 million, 30% of that is 30 million. So this 30 million is what you spread into 4 installments. So you will get the 30 million and then spread it between 30, 30, 20, 20. Are we together on that? You will get the 30 million and say, okay, what is 30% of 30 million? That's about 9 million. Then you deposit it in the first quarter. Then in the second one, you will deposit the next 30%, which is another 9 million. That's 18 million shillings. From there, you will also now go and deposit the 20%, which is the next 6 million. Then the other 6 million in the last quarter. So in total, you will have paid the 30 million, but in 4 installments, like we shall see in the next slide. So after filing your provisional returns and giving an estimate, now the law tells us that, 1, we are also not allowed to underdeclare. For example, if you're running a very big hardware shop, that if anyone looks at it, you are capable of making maybe 300 million. And for you, you say, I am expecting to make a profit of 1 million shillings. You might be penalized because of under declaration. So we must be cognizant of that. We must be cognizant of that. So whenever we are making our provisional returns, we must make sure we take concern of that. So this is something that is filed at the beginning of the financial year. So as an entrepreneur, when does your financial year begin? For some of us, our financial year is January, December. But to most of us, our financial year is July, June. So by now, because we're already in the new financial year, before close of July, you must have filed your provisional returns. Because if you don't, you will be penalized. You will be penalized because you haven't filed your provisional returns. And even if you went to get your tax clearance certificate, one of the things they will check for is your provisional filing. They will ask you, have you filed your provisional tax? No. Then they will tell you, go and file. when you go and file and you are actually filing past the required date, you will be penalized. So then they will tell you, okay, you have filed, okay. Then you will get an administrative assessment. Then they'll tell you, no. For us to give you a clearance certificate, first go and pay that penalty. So you see how taxes are funny and how we get to be entangled in all that. And yet, we all have the capacity to do these things. You only need a laptop, some few bucks of data, and about 10 to 15 minutes, and then you will be done. So what happens at the end of the year when we are filing annual income returns? When we are filing annual income returns, now for provisional taxes, you're not required to, prepare you're not required to prepare financials when you're filing provisional returns. This is just an estimate because we expect that you, the business owner, you know how much you're making. But when it comes to the annual income return, now these are the final tax returns. These are the actuals of what you have made. They are not estimates. With this, you will be required to have your financials ready. You will be required to have your income statement. You'll be required to have your balance sheet. You'll be required to have your cash flow statement well prepared and consistent. Because if they are not consistent, then you will invite audit queries. And when these audit queries come in, you will be inviting the URA people into your offices to ask you, why are your assets changing? I'll give you an example. One time when we were moving from the holding company to the microfinance, we had registered our company as Cray Holdings Limited then, but then we moved to Cray Microfinance. So what that meant is that many of the assets that we had then automatically moved to the microfinance. So in the eyes of URA, when we filed in the next year for Cray Holdings, we moved from, say, 10 million worth of motorcycles to 0. You get the point? So what that meant is either we sold them off and we probably didn't declare an earning on sale of assets. So then we received an assessment and we said, why is this assessment coming? They told us, no, we have seen that in the previous year, you had 10 million for motorcycles. In the current year, you have 0. Where are these assets? Did the company close? No. So where are they? In the statements. So that actually meant that we actually sold them to someone else, but did declare if we actually made a loss or we made an earning. So they gave us an administrative penalty. Then we had to go through the process of objections, trying to show them that actually, yes, this company is still a shareholder in the new company. So all the assets that you're talking about actually transferred to this new company. So that is how we escaped. But if you don't have that background, you will be required now to pay taxes on the sale of 10 million shillings, which sometimes are assets that you still have, but because you're not filing, you're not doing these things yourself, you're not tracking, you'll be forced to pay taxes that you're not actually supposed to pay. So at the end of the financial year, you will do your financials, balance sheet, income statement, cash flow statements. Once you have all these things in place, you will be able to calculate your final tax liability. So take note of these words. They seem threatening, but these are things you'll be interacting with every day. Final tax liability. Why do we call it final? Final because remember initially at the start of the financial year, we filed provisional returns telling URA that we expect to make 100 million. So of these 100 million, we've deposited with you 30 million already. At the end of the financial year, two things happen. You have either made more than you actually expected, or you have made less. So if the scenario comes that you have actually made 50 million, not 100, but you already paid the 30 million in tax, then you will simply tell URA that no, look, I expected to make 100, but I've actually made 50. So I will own, my tax liability is actually 15 million. However, I've already paid 30. Now, that becomes a tax asset on your balance sheet. That becomes a tax asset on your balance sheet. So the remaining 15 million will now become an asset in your balance sheet because, one, you didn't make the profits that you expected to make. That is why we are saying here that compare the final tax liability with the provisional tax paid during the year. If the final tax liability exceeds the provisional tax paid, pay the balance due. So if you expected to make 100, but you've actually made 150 million, that means that the tax liability of 150 million is actually 45 million shillings. But remember, you already paid the 30 under the provisional tax. So the remaining balance is 15. So you'll only be required to pay the 15 million remaining. So I hope we take concern on that one. So if the provisional tax paid is more than the final tax liability, you can either apply for a tax refund, which is unlikely that you will get it anyway, or adjust it against future tax payments. So if next year you happen to file your provisional returns, you will simply tell URI that last year, I actually projected that I will make 100 million, but I made 50. So I have a balance of 15. So this year, I expect to make 50 million because last year, I think I overprojected. So you will get an assessment of 30% of the 50 million, which is 15. But remember, you have already paid this money to URA. So you simply tell them, no, I already have this money on my account. So they will reconcile and you'll not be required to pay anything. I hope we are together on that one. So what does it require for us to file returns? What does it require for us to file returns? The first step is we log in. I believe every one of us has a team. So you're going to allow me share my screen so that to allow us actually be able to see this practically. So this is what the URL portal looks like. For those of us who have already logged in, if you forgot your passwords, there is a procedure for checking your passwords. You simply go to login, enter your PIN, go to forgot password, and then you will follow. You will be helped to recover your password via the email you used to sign up with URA. That's why I emphasize that do not use brokers. So if the broker used their email, then they become an employee or a shareholder in the company, because for every call for every transaction you will need to make, you will need to call them. Please check the email. What password have they given you? Read it for me. You'll have no control over your TIN account. So I am using mine as a sample to help all of us understand. And I think I'm already logged out. Let me just see. So I believe if you have your machine and your logins, you're also trying to log in so that we move together. So you have your TIN number, your password, then you will enter this security code the way it is. I hope we are all following. Cyrus, is my screen visible? My screen right now?
Yes, it's visible. You can
I don't want to leave anyone behind. So this is where we log in. You log in here after entering all that, and it will bring you to the landing page. So I'm hoping that as we do this, we are all trying to get into our different platforms. So once we at this level, this is our dashboard in URA. For those of you who noticed, this platform was changed, I think 3, 4, 5 months ago. So if you had not been interacting with it, you will now be lost a bit. But this is what it looks like. So once you log in, you will go to the part of e-services where you have registration, where you will now go to update your TIN. Yeah, so if there were any mistakes that were made on your TIN, if you used a broker, then this is the chance now you have to either change the email that they used, also to remove the taxes that they actually signed you up for, but you're not eligible for them. So you just simply come here to amendments and update TIN information. But for today, we may not go into that because it might take some of our time. But just for guidance, it is an easy to use platform. You'll simply go and say, okay, I think my name was misspelled. You'll go there and check the name. I was put at a wrong office. Probably the person who signed you up in Germany, but actually the office that the business where you're running is in Chipubo. So that simply means for any tax query, you need to call a Germany office, or the office here will need to call a Germany. So you can request to be moved to an office that is closer to your business. All these can be done under amendments. So when it comes to return, this is where we do our returns from. This is where we do our returns from. And under returns, we have a number of things where we have file a return, then we have annual. Are we all seeing where there is annual? Right here. Now, there are 3 things that I've talked about today. I've talked about the provisional return. I've talked about the final tax return. I've talked about the presumptive taxpayers. Now, you find that all those returns are available here. So there is no rocket science that you will need to call a broker to tell them, oh, please file for me. These are things that you can readily access under your platform. So we have income tax final, we have income tax provisional, we have income tax for presumptive taxpayers. Now, the presumptive ones are the ones I talked about, those ones who are small and don't have the time to go into the nitty-gritties of accounts, ABCD. So you simply go here and file as appropriate. So we will start with the income tax provisional. When you click income tax provisional, something that I said that by now, all of us must have filed. Now, you will ask me, I have not yet started doing business, but do I need to file my returns anyway? Because I'm not operating. Now, I will tell you that government doesn't know that you're not operating. URA is not privy that you haven't opened up your shop yet. They don't know. They really don't know. How you help them know is by going to file your provisional return today and actually tell them that I expect to make no money. When you give them a nil return, it shows them you're not operating. Now, I have to warn you, when it comes to taxes, you don't want to lie. You'd rather say, I expect to make maybe 500,000 and you file 30% of 500,000 than telling them that actually, I don't expect to pay or to make money. It simply means you're either not operating or something of the sort. So when you come to this level, it will bring you to this bit where now you will select your financial year, where you will say that, okay, 1st July, 2024, and you will say, please await it is processed. And then it will automatically cross-check which financial year are you actually supposed to be filing. If you pass the deadlines, it will show you that you passed the deadline. But the fact that the financial year is just at the start, it will now show you, like what you see, that actually you are filing for 1st July 2024 to 30th June 2025. Are we together up to that point? So then you press next. If you press next, you'll come to resident. Make sure you press resident, because foreigners are charged different from what we nationals are supposed to be paying. So you can see that the estimated chargeable income is already set and it's nothing you can change. How together? Here you will come and tell you that I expect to make 1 million shillings this year. Then you press tab. Automatically, the tax assessed will be 300,000. You will not need to call a person, no. It's already preset. So that's why they will tell you amount you expect to make 1 million shillings. So for if you expect to make 100,000, you say I expect to make 100,000 and you will be charged 30,000 shillings. No quarrels. Then you will say next. When you press next, it will show you income tax provisional 30,000 shillings, penalty 0. Why? We are still within the deadline. We are still within the filing deadline. Had we moved out of the deadline, I would actually pay the 30,000 plus a penalty here. So the net liability will be 30,000 plus the penalty. Are we together? So once that is done, you'll simply come here and enter these codes F, T, E, M. And then you submit. When you submit, it will scan for any errors. Once there is no error, you'll now be taken to a space where you choose your payment mode, and then you will be able to make your payment. If you select mobile money, you can easily pay via mobile money. If it is bank, you pay by bank. It is that simple. And I hope we have all seen how simple it is. Simply log in, go to returns, go to annual, income tax provisional, give your the estimate you're planning to make, and you'll arrive right here, and you'll pay your taxes with ease. So here you don't need an accountant to do this for you. You don't need a very sophisticated expatriate to help you file your provisional returns. It's very easy and doable. That is why when URA pounces on you, they will not be any merciful to you, because they also know it is this easy. So I'm hoping that we've all followed through when it comes to filing provisional income tax. Are we together up to that point? Anyone who is having questions up to that point, I would really not want to leave you behind. You can, I think Cyrus can support on that. Either you unmute or you put it in the chat so that we can be able to see it.
If there is a question at this point,
yes,
can put it in the chat as the facilitator is continuing.
Okay.
Or
so
is
we are
there
doing all this with the assumption that we all at our machines. It's not good for you to just look on. Please engage with your system, because this is something we are learning to do for ourselves. So I don't want to leave any of you behind. So next, we are going to look at how do we file our final returns. Now, these are more engaging because you need to do a lot. You need to do a lot when it comes to when it comes to filing, it's a bit more detailed. So I request that you have some information. You may not really do it now, but it's something that you can be guided to do later on while you are alone, so that you don't mess it up.
Mr. Raymond.
Yes, please.
There are two questions here. I don't know if you can address them towards the end. Let me read them for you and you see if you can address them at this point.
Okay.
One is coming from Jonathan Chetume saying,
Yes.
Mr. Kiwanuka, how a penalty is calculated. And then another one is coming from Docas Askas Industries Limited. And it goes, please, how to open the portal? I think you addressed this last one. Maybe you could try to echo.
Okay, as the portal is coming up, I will answer Mr. Chetume's question of how a penalty is calculated. One, penalties are set already by the Income Tax Act. It is not that they are assessed by someone who sits at your head. No, the system is auto set, and all penalties are already enacted by law. For example, if you are operating a microfinance institution, I'll give that example because it's the area where I'm more conversant. This taxman will sit down and look comparatively and say, okay, institutions within your size are reporting an average tax liability of maybe 25 million every year. But for you, are saying you're actually not filing. So sometimes penalties are actually assessed comparatively, looking at what your other contemporaries are actually filing. So that's what we call an administrative assessment. Two, if you happen to get an invoice or pay for something or be charged for something, for example, you're saying you haven't made any money, but then someone somewhere claims that we actually paid so-and-so consultants 5 million. But in your assessment, you're saying I didn't make any money, or you're saying that I made only 1 million. Someone else has already reported on your team that they actually paid you 5 million shillings. So what that means is URA will now look at the 5 million and say, okay, there's this 5 million. Then they will collect all other payments that are relating to your team. They will compound them and then get an aggregate tax or aggregate income. They will now patch it up with other laws that now talk about penalties. Then they will administer a very good, heavy, and punitive tax for you. So that is sometimes how penalties are really assessed. So it really depends on which kind of tax. That's why you find that, for example, in the recent in the news recently, we had one of the big businessmen being told to pay 90 billion shillings. And it was all arising from VAT. So VAT has its own penalties. Income tax has its own penalties. Excise duty has its own penalties if you actually don't do what it's supposed to do. So if, for example, you're not filing on time, there is a 200,000 that is paid monthly, the penalty that is paid monthly. So they will get 200 for this month, 200 next month. So if it's 1 year, so you do 12 months times 200,000. That's the penalty you will get if you have not filed on time. So for example, if the deadline for filing is maybe 30th of July for provisional tax, assuming, and for you, you come and file your provisional in September, they will count August, September. Those are 2 months. So you'll be liable for 400K because of not filing. Then you will make noise, but this is already system preset. Remember, this 200K is coming with an interest that is also gazetted by law. So that is how penalties are calculated. So to come to Dorcas's question, how to open the portal. Docus, I illustrated that you will go to www.ura.co.ug. Then you will go to login. You see where there is switch account here. The button is always login. So you will log in. Like I said, you must be handy with your TIN number and your password. Then you will enter that verification code and log in. So the is www.ura.go.ug. Then you come to login, enter your password plus the code, and you'll be able to sign in perfectly. If you lost your password, you will simply enter your PIN, your TIN number up there, come down to forgot password. You'll be directed to a place where you will enter your email, and then the reset procedures will be sent to your email. So you must be handy with the email you used to register your TIN number. So I now want to go to the bit of, I'm hoping that my screen is visible, Cyrus. You can let me know if it is. Cyrus, is my screen visible?
Yeah, it's visible.
Okay. So we have seen how to file income tax provisional. So I believe by the time we leave this masterclass, all of us surely should be able to file tax provision because it's very easy. You shouldn't get a penalty for not filing your provisional income tax because we have seen how simple it is. So then we go to income tax final. Now, at this point in time, we are at 2 bridges. We closed off last financial year on 30th June. So we are still mandated to file our final income tax returns. Now, still you will ask me, if I have not been in business, do I need to file my income tax returns? I will say yes. You are mandated by law, by the Income Tax Act, to file these returns. Now, like I said, if you haven't done so, the moment you have a TIN number, you are actually in business. So for you, the only way you tell URA government that I'm actually not in business is by filing a nil return. Telling them that, yes, this year I started, but I haven't actually launched my business. So it is 0-0. You will have one obeyed the law of filing by the due date. So you will not be penalized for filing a nil return. But it's also dangerous to continuously file nil returns while you are in business. Why? Today, our teams are everywhere. If you go to do business with anyone, they'll ask you, please help me with your TIN. If you're renting somewhere, they will ask you for your TIN. So if this person, for one reason or the other, enters your TIN as either a payment for a service or a purchase for a service, now here you are telling URA that no business happened, it is 0. You will be penalized because you are lying. You will be penalized because you are lying. Somehow, somewhere, there is an alert on your TIN that there is actually a transaction that happened. It may not be an income, yes, but you transacted. So URA requires you to show them that transaction that, yes, I didn't make money, but I purchased tires of 300,000. File it and keep quiet, because if these guys trace it back to you, you will need to explain you are buying tires for what? To do what? Yeah, because none of us eats tires. So it's either you are buying tires for a commercial vehicle, buying tires to do something commercial. So it will be hard to convince someone that you actually didn't transact or didn't make money during the year. So now, when it comes to filing final income tax returns, there is a difference. You realize that for the provisional, we didn't have this bit of download income tax return form, which we now have. That is why at the start I mentioned that you must prepare your income statement, your balance sheet, your cash flow statements, because you're going to be required to enter them into this form that we see here. So here, when we are entering the return period, we must make sure that we enter the previous financial year, which is 1st July 2023. Yeah. So the system will automatically now give you the closing date. And it will tell you that you're filing for this period. So as we wait for this, please keep the questions coming. We'll be able to answer one by one.
Mr. Raymond, there are 2 questions already in the chat room.
Okay, I see one from Albert. Why is one required to pay for provisional tax before even the year ends? Wouldn't that be making money for us? Very good question, Albert. Now, like I said, some of these things are laws. Some of these things are laws and they're enacted by Parliament. So there are things we may not be able to change. However, like I mentioned before, the way you file your returns answers this exact question. Wouldn't that be making money? I think you want it to mean from us. One, URA is not forcing you to tell them that you are actually going to be making 1 million. You're free to tell them that I don't expect to make money, and you file 0. Altogether, you are free, like I said, to say no. This year I don't expect to be making money, but I'm in business. So you will file a 0 or what we call a nil return, and no one will penalize you for that. You simply go to the process you did and you say 0 and you submit, and no payment will be required from you. I hope we are together on that. However, like I said, for any business person to be on the safe side, you cannot say that you don't expect to make any money if you're going to start. It's easier to say, I hope to make 100,000 shillings, and you pay 30% of 100,000. 30,000 shillings is not as bad as penalizing you to 100,000 shillings, because even not filing is an offense by law. Yeah. So it is requirement by law that you file provisional tax. So someone is asking to suppose also file income return. Now, there is a recent act that exempts SACCOs from certain taxes, now like the withholding tax on dividends and also incomes. So yes, SACCOs are required to file incomes. Yeah, income returns, but they're not taxed. So you can refer to, I remember in the recent bill that Parliament was bringing, they were trying to bring in taxing of unit trust funds and SACCOs, which parliamentarians, on a good note, threw outside into the basket. So for SACCOs, they are exempted from certain taxes. So that bill is something that you can refer to so that you can see which taxes that the SACCOs are not supposed to pay, but they are liable to pay because they actually have employees. Yeah, so you will need to acquaint yourself very well on which taxes you're supposed to pay for as a SACCO. Someone is asking, how can I check if my accountant filed my income tax? Thanks. So that one I will show you how to check if the taxes are actually filed.
Mr. Raymond.
Yes, please.
Your voice gets a bit down sometimes for the past 2 minutes and a bit up. Yeah, so try to.
Is it good now?
At that range.
Right here. Okay, I think I changed position a bit. So, now we are here back to filing final income return. So you will come here to download income tax return form for non-individual. When you click it, it will bring you to a screen like this one, which will now download that bit to your computer. And it's an Excel sheet. So your Excel, bit on your PC must be good enough. So there is a bit of instruction here, and you can see our file is being downloaded. So if in the event that you lost your password, you can still go to the URL portal. There are templates of this kind of file that you can actually get and be able to follow through with us so that we don't leave you. You simply go to the portal, go to templates, and then you select IT return none in the video. So when you select it, it's a normal Excel sheet. And this is what it looks like. So before you start, make sure you enable editing. Are we together? When you come to this point, some laptops and operating systems will bring you this message. Microsoft has blocked macros from running because this source of this file is untrusted. What do you do in this case? Do not be frightened. Simply go, first close this file, go to where your downloads, go to your downloads, and you will find it there. Right click on the file. I hope we are moving together. Right click on the file, go to properties. Yes, go to properties. Then under properties, you come to a point where there is security. This file came from another computer and might be blocked due to help this computer. So you say unblock. You check unblock, then you say apply, and you say okay. So when you go back to this file, you will open it. And this time around, you will find enable content. When you select enable content, your macros will be enabled because ideally, this sheet cannot work without macros enabled. I hope we have gotten that. Members, I hope we have gotten that. So this sheet does not allow you to cut and paste any values in this sheet. You must fill them originally. Are we together? So at this point, you will now enter your TIN. You will now enter your TIN. You will enter your TIN. So 966. So 10082966608. So once you do that, you will now enter your return period. So you will enter 01/07/2023. So the macros now will automatically run to support you on now entering figures within that date as you see them running. I am hoping it is doing the same on your end. If you're lost, please you declare first that I am lost and we'll be able to find you. So when does the financial year end? 30th June 2024. Right. So after that, you can see when we opened up, all these sections were not here. But because the macros are enabled, they are able now to be seen. So we start with section B to C. Are we together? Up to this point. We now see income tax return form. Filing status. Number 1, whether original return or amended return. We must select that it is actually an original. If it's the first time you're actually filing this return, it's the original. But there are instances when you're late and maybe your accountant hasn't yet finalized the accounts, you don't have the balance sheet and the income statement. For you to beat the deadline and avoid the penalty of not filing on time, you can come and file what we call a nil return. Are we together? When you file this nil return, it helps you, 1, to have beaten the deadline for non-filing. Because if you don't file on time, like I said, there is a penalty every month. So you come, file the nil return for purposes of beating the deadline. So after your accountant does the accounts and you're satisfied that this is actually a true representation of my business, then you go back and follow the procedures. You will get this return. But this time around, when you come, you will select amended. Because now there is an original nil return, but you're now coming back to put in the actual figures. So you will select amended. I hope we are clear on these two things. So you will select original. So you realize that all these sections are already frozen because the taxes are already set to 30%. So as we fill in the things in the next slides or the next sheets, automatically our tax will be calculated and will be presented here, basing on 1, the income statement details we fill and the balance sheet details that we shall fill. So I'm hoping that you have your dummy statements to be filled in now. So you'll click next. Under next, we have what we call holding status. Now, I've already mentioned something about our company, that we have Cray Microfinance, but then we have Cray Holdings, that is the mother or father of the microfinance. So for whatever business that you are filing for, what is its holding status? Is it the holding company or it's a subsidiary company? Or it is both, or it is neither? Are we together? So if it's a standalone, it's neither a holding company, it's neither a subsidiary company, you'll simply say neither. Are you sure you are selecting neither? Yes. Are we together? So once you do that, you will now come to the next section. Particulars of office holders. Do you have any directors in that company? So in this particular point, it could be you or your partner. Remember, we said in a slide that I shared, you as directors must have TIN numbers. So it is what you fill here, TIN number for yourself as a director, your name and the designation, and your address. You fill it right there. Then you move down, particulars of major shareholders. So now the difference up here is we are looking at office holders. Sometimes a director is different from a shareholder. Some of us have boards of directors, but they are not necessarily shareholders. So if you have people who are not shareholders, but they are directors, you fill them right here. So here, we want particulars of shareholders. If you're a shareholder, if you look at your memorandum and articles of association, this is where you get this information. If you're holding more than 10% of shares in that company, this is where you fill your details. Your TIN, your name, address, and the percentage shareholding that you have in that company. Then you will move down. Now, this is our balance sheet. Now, remember, we have already prepared this balance sheet. It's just a matter of punching in the figures. You will enter what you have in land and buildings, plant and machinery, motor vehicles, furniture and fixtures, other assets. And then you'll scroll down. Do you have any, what are the shares that you've invested so far in that business? Any debentures? Debentures are necessarily loans or anything. Any fixed deposits, any government securities, any other investments. Then you move on to current assets. Yeah. Now, if you're dealing in a stocking business or you're a contractor, this is where now you come in. Raw materials, work in progress, any finished goods, anything in the stores, you enter them as per your balance sheet. Now, if these things don't apply to you, do not be scared. Simply put 0. Do not be scared and say these things don't apply to you. Simply put 0. Accounts receivables. Now, for us who lend, this is where I'll put our loans, or what you call our loan book. Prepayments, are there people you paid prior before the actual due date of repayment? Are there any other receivables that you have? You enter them here. What is your bank balance? When I send them a bank, how much cash do you have in the drawer? You also enter it here. Then you come to this other bit of loans to related parties, advances to staff. Now, like I said, many of these things here may not apply to your business. Anything that doesn't apply to you, simply put, is 0. You don't have to fill every space. Now, we have the balance with the Revenue Authority. Remember the balance I talked about when I was sharing about the provisional return. If URA has any balance of yours that they actually has not been utilized, this is where you put it to show them that actually I projected 100 million, I paid 30. So URA already has 30 million of yours. So this is where you put it. So you look at the current liabilities. What liabilities do you have? Abakubanja. It could be a bank, could be a supplier. It could be that you leased out maybe machinery. It could be accrued interest, amount due to others, unpaid matured debts. So you put them there. So provisions for income tax, put them here. Provision for bad debts, proposed dividends, other provisions. So if your business is mandated by the IFRS accounting standards for you to have these provisions, there is a new IFRS standard that requires even businesses to have these provisions done. That is why you have them. So you'll be now required to read extensively over what provisions you have to make that are particular to your business. Yeah. So source of funds, how much share capital have you issued so far and is paid up? Reserves, share premium, capital reserves, statutory revaluation. If you have any of these reserves in your business, you fill it in. If not, you simply put it 0. Now, at the end of that day, as you fill all these things, the balance sheet must actually balance. Yes, it must actually balance. We all know the balance sheet formula. Assets must be equal to equity plus liabilities. So it must be, the balancing factor must be 0 at the end of the day when you get to the formula. So after filling in our balance sheet, as per the accounts that we prepared, you simply move on to next. Now, we see that we are now entering profit and loss account for the year. If you're a microfinance or a lender like us, they're asking you for interest income. This is where you put it. If you're a consultant, you received consultancy fees. This is where you put them. Yeah. So if you're in the stocking business or manufacturing business, you now look at your cost of sales. What was the opening stock? Raw materials, work in progress, trading or manufactured goods. all these appear on your income statement. That is the assumption. So you will now, if you had imports and things like that, this is where you feed them in. Local purchases that are net of duties and taxes. This is where you feed them in. Are there any direct costs in terms of wages or interest expenses from banks? This is where you fill them in. Factory overheads. Now, I don't want you to bother your head or yourself with things that are not particular to your business. If you find that something is not particular to your business, factory rent, put a 0. Factory rates, 0. Fuel and power, 0. Indirect wages, 0. Yeah? So don't be scared by the terms that you put here. This sheet was designed to accommodate every kind of business. So don't say that, hey, I see factory rates. I'm not a factory. No, this accommodates all kinds of businesses. So whatever doesn't apply to you, please just put it. So other income, you put your incomes from completions, annuities, royalties, exchange gains. So anything that applies to you, please do fill it in. If it doesn't, put a 0. Insurance business, if you don't run insurance business, you have no business there. So when it comes to expenses, most of these apply to us. We have advertisement, audit, bad debt written off, commission, computer expenses, consumption, donation, entertainment, freight and transport, gifts, hotel, boarding and lodging expenses, power, fuel, provision for bad debts, rents, repairs of buildings, machinery, sales promotion, staff welfare, quite a number. This is where you input all of them. Now, you have a provision in this instance that if you have an expense not captured here, you can actually fill it in here and put the amount. Then we'll move down, administrative expenses, depreciation. Now, if your accountant has actually done a good account for you, you'll get
Mr. Raymond, could you please try to stabilize your sound? You are going a little bit more down and up, so try to get a stable position as we are trying to conclude and call in the questions.
Okay, so these are expenses that I hope you can hear me, Cyrus. Am I good now?
Yes, you are now audible.
Okay, so you will put in all these expenses as they come through. Now, recently we have an issue which comes to rental tax and all that. So many of us are renting. Be sure that your landlord gives you their TIN number. You list their name, location of the premise, and period of tenancy, say Jan to December or Jan to July. Gross rent paid. In the event you don't put these things of the rent of your landlord, this will not be considered a deduction. So you take note of that. So this is, if you're dealing in stock business, this is where now you put all your manufactured goods and inventory. It's too large, so you will follow through on that one. If you have any raw materials in store, you also enter them there. So then you come to section H, computation of self-assessed tax liability. So if you've paid provisional tax already, this is where you clear it. You say, I paid to Stanbic Bank branch this date of deposit, account income source, payment number. You put them right here because it's a tax you assessed yourself. If you withheld any tax, yes, or if you were charged with holding tax, this is why you put that, okay, I gave Cray a service and they charged me 6%. So this is where you put it, so that tax is of what you're going to actually be paying. So once you fill in that side, all these things will be self-assessment. So if you have a profession, like a business or profession, this is where you have to come and enter your returns. If there are any deductions, you have provisions to actually enter whatever is missing. So many of these sections, you will find that because of time, we may not really run through one by one, but there are things that don't apply to you. You'll find that there are sections for insurance business, long-term contracts, if you're a contractor, chargeable income from mining business. So it's not a must that you have actually to fill all these things. No, fill only what pertains to you. You've seen there's insurance business here. So this doesn't apply to you. Repatriated branch profit, you're not a multinational that you have branches in Kenya. So once you do all this, this is the last schedule. Then you'll say validate. When you say validate, it will bring you no error found in sheet. Now, because I haven't filled any figure in this sheet, it will show no error found in sheet. Do you want to generate upload file? Yes. Then you'll ask me where I want to store it. I will store my desktop and I will say save. No error found, upload file is saved. Okay. So this is what someone would call a nil return because it's so when I come back here on our page, I'll simply come and enter K9BSWW. Then I'll go to choose file and I'll go to desktop where I saved it right here and I'll say open and I'll say upload. Do you want to submit your return? Okay. So it will check again. Are there any errors? If your balance sheet is not balancing, you will not get an upload. So once the sheet accepts, it will come here to this level, and then you will wait for it to process. Once it processes, you will now not be charged any tax, but you will have beaten the deadline for filing your final income tax. Are we together? I hope we are together. So after that, it will now take you to the next level. If there's any tax to pay, it will have access to you until the system will tell you you're now supposed to pay so much money. If it's 10 million, your chargeable income, you will pay 30%. If you have a balance from your provisional tax, then you will balance out, and that will be the end of your filing and your compliance. So that is basically how we actually file our final tax returns and our provisional tax. Because of time, we look at payee and other kinds of taxes. So from that, I will welcome questions. But that brings us now to the end of my presentation. We have basically run through all these steps. And I want to welcome questions where you haven't understood. And I see whether we can be able to support in the remaining few minutes.
Thank you so much, Mr. Raymond. First and foremost, I would love to appreciate the amazing information and the way you've made numbers and taxes relatable. On behalf of the organizers, would love also to apologize for the inappropriate messages and the interruptions, especially which happened in the first minutes due to the hackers who tried to sneak in. And I thank the team in the background who managed to ensure that we get back on track. Thank you so much. I'm going to welcome, due to the effect of time, like 3 questions. And the first question comes here from Kenneth, Tech Buzz Hub. I would like to wait for Pizza to where we enter real figures. That's where I have found tricky situations. The second one is from Albert Wakimali. I think, Mr. Raymond, you come next time. This is amazing. You make numbers look simplified. Yeah. So we shall plan and organize a subsequent masterclass in line with taxes. Since you see numbers, you can't rush them. But is there? Oh, Mr. Raymond, let me try to see if there was another question. Let me hope you answered this question, which was from Docas, Ask Us Industries, which was saying, when is the deadline for filing income tax, Mr. Raymond? Were you able to answer her?
No, actually, I didn't answer her.
Yeah, so she have to.
The
She has
deadline for
another
filing
question.
income tax is the law gives you up to 6 months.
Mm-hmm.
Yes, the law gives you up to 6 months. So by December, you should have filed your income tax returns for the previous financial year.
Oh, I do hope Docas, you've gotten the answer. So Docas had the second subsequent question, which was saying, how can I check if my account, if my accountant filed my income tax? Maybe as
So
a
how do
startup.
you check that? You will go to, when you go to your portal, just at the very start, you will see what we call tax statements. So those tax statements, when you go to them, they will be able to take you through the return periods. So you will go to those return periods and actually check what was filed. If nothing was filed, the system will simply tell you nothing was actually filed during that time. Then you will know actually, I either have a penalty or not.
Thank you so much. It looks like the chat, the questions in the chat room are done. If there is an attendee who has a question, you can raise your arm and we give one slot for one person. Is there one person? Or maybe is there an attendee who would love to give remarks for 10 seconds about today's masterclass? You can raise your arm and then I give you 10 seconds before I bring in conclusive remarks. Okay. It looks like we don't have an attendee here who is willing to take up the opportunity. I would love. Okay, let me read this last one. It's still from Docas. Docas, thank you for being so active. This was so good. Thanks, Mr. Raymond and Einstein Rising for organizing this. Okay, I think this could be speaking on behalf of all the attendees. Mr. Raymond, would you bring in your parting shots in a few seconds, and then we could call this a
First and
great.
foremost, thank you, Einstein Rising, and for everyone who has made it on time for this masterclass. There is so much we've shared in this little time, but there is also so much that we haven't shared. So for every entrepreneur that is here, the parting words I leave with you is, please go and read extensively. These taxes differ from business to business. And I know many of us are either in agriculture or manufacturing or service or consultancy, but there are different taxes that apply to us. So go and read about your business. What taxes must I pay as a business? What taxes must I pay? When is the deadline? How can I be supported? Ensure that you file. Now to my friend Albert, who was worried about URA making money out of you. It's not them pushing you that put 1 million. What you give them is what they use. So don't run away from taxes. Ensure that you comply. Avoid penalties. Imagine you registered your business last year and you have not been operating. And then you get your first contract only to apply for a tax clearance certificate and they tell you you have penalties of maybe 3.6 million. Why? You haven't been filing. So it can be disastrous. So I encourage all of us, let's know the taxes we are supposed to pay and let's not run away from the tax man. Let's go in there. Let's talk to them because it's part of life. It's part of business. We cannot run away. So thank you very much, people. And I encourage all of us for all these master classes that we have. I encourage you to come, attend. You will learn a thing or two that will support your business. Thank you very much and have yourself a very good evening.
Thank you so much, Mr. Raymond Kiwanuka Peter, for the insightful masterclass you've given us. It has been very relatable, very practical, very insightful, with the practical examples, especially even for people who are not well conversant and have that fear for numbers. Thank you so much for the entrepreneurs. Thank you so much, Einstein Rising, the main organizer for this amazing tax masterclass we've had today. Thank you so much for ecosystem builders and amazing partners. We've seen you take Buzz Hub and a lot of more representatives from OVO and a lot of more other ecosystem builders. Thank you so much, my fellow team, Doris, who have been behind in the technical area, trying to see everything move smoothly. So for the entrepreneurs who are on or attendees who would love to get a recording for this, if you want to revisit it and understand it and comprehend it more deeply, you can send a request on the mail. Let me try to type it here on the mail. Doris, you can send Doris at einsteinrising.net or Cyrus at einsteinrising.net, so that we share with you the link so that you can visit anytime and you understand how you can do this at your own time, at the comfort of your working space, at your home, anytime. It has been a pleasure being your main host for this tax masterclass. See you next time. Have a great night. Bye-bye.